Live from Sydney, I'm Paul Allen. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. Well, stocks trim gains and crude oil jumps after US forces conduct what they call self-defense strikes against Iranian missile sites and boats in the Strait of Hormuz. Taiwan's stock market value overtakes India's as the fifth largest globally, while South Korean shares notch a new record high as the explosive AI-spurred tech rally charges ahead. India's bond markets shift as the US-Iran war stokes inflation. Muthoot Finance Managing Director George Alexander Muthoot is going to join us exclusively as issuers rush into floating rate notes. Well, we've seen oil rebound and stocks trim gains on news that US and Israeli jets struck Iranian vessels in the Strait of Hormuz. And that's just hours after President Trump suggested interim deal negotiations were progressing. US Central Command says it hit missile launch sites and mine-laying boats and what it calls defensive strikes. The renewed fighting underscores the fragility of the ceasefire, just as expectations were rising for a longer truce. Trump also used a Truth Social post to say that Iran's enriched uranium would either be handed over to the US or preferably destroyed in Iran. Well, as Asian energy markets grapple with the Strait of Hormuz closure, traders are fixated on the weather. Summer forecasts are pointing to higher than normal temperatures across Asia, which are set to strain power grids. Let's bring in Asia Energy Commodities editor Andrew Janes. Andrew, give us a sense of the scale of the impending demand situation in parts of Asia.
Hi, Paul. So we've had a fifth of global gas trapped behind the Strait of Hormuz for about 3 months now. But we haven't actually seen the kind of extreme price swings that we've seen in LNG during previous energy crises. And that's partially because we're in a so-called shoulder season between the Northern Hemisphere winter and summer for gas. But that's set to change. As you mentioned, weather forecasts for the Northern Hemisphere for summer, particularly in Asia, are looking hotter than normal. We've also got an El Nino developing and emerging over the next few months, and we're starting to see that affect the market. One of the reasons we haven't seen big price increases yet is that Chinese imports, China being the #1 importer, have been weak over March and April, but that's now starting to change as the Chinese get ready for a hot summer. So we've seen a couple of shipments recently that were headed to Europe divert to China. And if we get into a situation where we've got hot summers in both Asia and Europe, we're going to get into this competitive situation where Asia and Europe are going to be trying to outbid each other for gas shipments. So yeah, we could be heading into a period where prices increase sharply, Paul.
Andrew, even if we assume a best case scenario, say the Strait of Hormuz opens in 5 minutes' time, it's going to be still quite a while before there's any relief before these summer peaks hit, right?
Yeah, I mean, summer's almost upon us. Even if we do get some sort of deal in the near future which opens up the Strait of Hormuz, there's a lot of vessels there. It's going to take a long time to clear. There's probably still going to be nervousness on a lot of ship owners about getting out. So yeah, I think an opening of the Strait of Hormuz in the short term is going to help things a bit, but possibly not enough to fully avert the situation with the rising prices.
Yeah, you mentioned a moment ago we might see a very competitive bidding market between European and Asian markets. What's the plan for some of these governments who are going to be needing to spend a lot more to secure necessary energy?
Well, I think what we generally see is the more weather-affected markets, places like China and Japan, they have the money to pay for this. It's the emerging markets in Asia, places like India, Pakistan, they typically are a lot more price sensitive, and when prices rise they opt out of the market and look for alternatives, coal and other things to use for electricity.
All right, Bloomberg Asia Energy and Commodities editor Andrew Janes there. Well, let's get to our first guest for the day, who is an expert on energy markets. Sarah Emerson is founder and president of ESAI Energy, a market research and forecasting firm for the global oil, gas and renewable sectors. Sarah, thanks so much for your time today. And today's been a very, instructive, illustrative, descriptive day of where we're really at here. We had some optimism from President Trump that negotiations were in a good place, and then some more skirmishes in the Strait of Hormuz. So how much confidence do you have that a deal could be close, or are we just seeing another false storm?
It's really hard to say. I mean, it seems as if a deal is close on the issue of the strait. But remember, this deal is just a prologue. What we're really looking for is a nuclear deal, which would be sort of a secondary development. And even if they can get an agreement to open the strait, getting to the point where there's a nuclear deal is far more difficult. So I'm not sure we're really looking at a solution yet.
Yeah, well, let's assume that the nuclear problem gets kicked down the road in favour of getting the Strait of Hormuz open again. What conditions do you feel need to be in place at a minimum to get ships transiting that important piece of water again and satisfy insurance companies as well?
Well, there would have to be an actual deal agreed to by both sides. And then I believe the Iranians have indicated, or the deal discussion, or the negotiators have indicated, that Iran would take something like 30 days to clear the strait of any hazards such as mining. And so I would think then that ship owners and insurers would have to look at this and say, yes, we feel confident that we can move through the strait without harm. But there's a lot of ships waiting to move. So this is also a bit of a logistics question as well. So it's going to take a little bit of time, even if there is a deal.
In the meantime, do you see oil and gas prices as being somewhat range-bound, or do you see some scenarios where prices could break out to either side?
Oh, I think this drop in price, this anticipation of looking for an end to the crisis and the drop in price is a little premature. I mean, nothing's actually happened yet. The strait hasn't been reopened. There's just sort of anticipation that maybe this is the first step towards an end to the crisis. So I think that, for my mind, it's been a little bit of an overreaction, because even if the strait is opened, as I said before, it's going to take time. It's not just about the ships and the ship owners. It's also about the fact that you still have to fill the supply chain, which takes 4 to 8 weeks, depending on the location of your consumer. So you still have to do that. And as your journalist pointed out, we're leaving the shoulder season. This whole crisis has been in the shoulder season for demand. We're now entering the higher demand period. So there's going to be more interest in getting crude. So I would actually see more upside pressure at this point from the 90s at this point, until we can actually see the oil reaching destinations.
Yeah, to your point on it's going to take a while for normal services to resume. You mentioned the time frame of 4 to 8 weeks there. How long do you think it would be before we see prices come back down to a level that we saw pre-conflict?
I still think we're a month or more away from that. Again, assuming there's a deal that moves ships steadily through the strait. I think we still have time. It'll take time to get that crude oil and even the petroleum products to market. So maybe there's another month before we can begin to see prices come down, let's say back into the 80s.
Do you feel like this closure that we're seeing in the Strait of Hormuz, it's been a while now, does it mean a reduction of oil supply overall, or just a reduction of a cheap oil supply? Is this a case that there's still plenty of energy out there, provided you're able to pay for it?
No. This loss of as much as 13 million barrels has been tremendous. And it has not been, you cannot replace it. You can replace some of it, but you can't replace all of it. So what's happened is the consumers are consuming less, and other producers are producing more, but you still have a significant disruption to the global market. And that's what we're trying to end with this potential extension of the ceasefire and opening of the strait. Although, as I say before, if that leads to an insufficient nuclear deal, then you're kind of back to square one.
Andrew was talking before about the brutally hot early summer. It's only May at the moment, but already things are getting very warm in India and the rest of South Asia. Europe's already getting a taste of potentially a very hot summer to come as well. On the demand side, what are the implications here for prices?
Well, in countries that use oil for power generation, these are very significant implications because you do need it for cooling, and you need it for electricity in hospitals and community buildings and things like that, even if you don't have air conditioning. So it's a pretty significant. If you are using oil, I mean, a lot of these countries also use other forms of either natural gas or renewables to make electricity. But it's, the other piece of it, of course, is it's also the driving season. Especially in the Northern Hemisphere, you have more driving everywhere in the summertime.
As the world looks past this conflict, because it will end eventually, resiliency has been a word that's come up again and again, regardless of which country we're talking about when it comes to securing energy supply. Now, with that in mind, do you see a potential here for Australian LNG to structurally displace Middle Eastern supply for buyers in Asia, particularly longer term, as they look to build that resilience?
That's entirely up to how much Australia wants to develop its LNG capabilities and its, LNG capacity. Yes, absolutely. I think right now we have sort of almost a desperate race for filling the volumes lost to the Gulf. And so I think, whether it's Australia or the United States or other regions, there'll be a big effort to increase LNG exports to the main consuming regions. And yeah, certainly Australia has an opportunity if it can develop the LNG. Additionally, I mean, they already have a significant LNG capacity to develop more.
Look, the Middle East, though, I'm trying to get across the point, is notoriously volatile politically. It's no stranger to conflict. Typically, the market tends to forget that once the conflict passes and goes back to sourcing cheap oil. What I'm really asking here is, do you think people will remember this time, or is Middle Eastern oil just too cheap to ignore?
Oh, no, this is a serious lesson has been learned here, that the world is dependent on this region, and countries in the region are going to find alternative ways to export crude. I think investors are going to look at the region a little bit more cautiously. I think buyers of oil, especially, but also potentially natural gas, are going to look at this region and say, do I really want to be dependent on this region? So diversification is going to be the watchword going forward. Diversify your supply of energy from different kinds of energy and also from different suppliers all over the world.
As we look ahead to the second half, are you anticipating any consolidation in the oil and gas sector? What's on your radar in terms of M&A activity?
Well, as we entered the year, oil prices were a lot lower, and the pressure for M&A was probably a little bit higher. Now with oil prices a little bit higher, that pressure eases a bit. But I do think, it depends on the part of the world you're in. But in some parts of the world, the industry is very mature, and we're seeing consolidation. Obviously the United States being the locus of that. But I think in a slightly higher price environment, the pressure drops a bit.
Well, at some point, this conflict will become history. It'll become a memory. When that happens, what are the implications for previously sanctioned Russian crude?
That's a great question. In the meantime, we've sort of taken our eye off the Russia-Ukraine conflict because there's been so many headlines about Iran. But that conflict remains a critical issue. And I think the outlook for Russian oil depends entirely on what happens with Ukraine. I think this is these are two different issues, two different regional problems. I'm not sure they're that linked, even though Russia is providing some additional crude to countries like India. I really think they're almost two separate issues with two different potential outcomes.
Would you say the same about, when it comes to addressing that resilience issue, the move towards, China, for example, building more coal-fired power plants, the rollout of renewables as well? Are those the issues linked, or are they separate as well?
I think the situation both with Ukraine and Russia and with the Arab Gulf are saying to all consumers, I must diversify. I must make electricity from many different sources. So I think, yes, you'll see more coal in some countries, but you'll also see more natural gas. You'll see more renewables. You'll see more efforts at conservation. And you'll see more electrification of the transport sector. This has been a shot across the bow of all consuming countries that, we can have a crisis of this size that can go on for a number of months.
And how do you see demand from AI fitting into this picture?
Obviously, in countries where electricity is made from oil and gas, that has a big impact. And so that would have a big impact on consumption of both of those fuels. And then in other countries where there's renewables, also potentially there as well. So that definitely increases the demand for power generation. But at the end of the day, you also have AI probably making both the consumption and production of energy more efficient. So you begin to round off the edges of that growth in demand. So I think we have a 5-year period of, sort of probably very strong demand growth, but it won't go on forever. You'll begin to have a situation where the intensity of demand growth drops off.
All right, Sarah Emerson, founder and president of ESAI Energy, thanks so much for joining us today with your analysis. And we have plenty more ahead. This is Bloomberg. Welcome back. You're watching Insight. Foreign ministers from the US, Japan, India and Australia are meeting in New Delhi as the Quad grouping seeks to revive momentum after a high-profile clash between President Trump and Prime Minister Modi. Let's get live now to the Indian capital and our government reporter, Sudhi Ranjan Sen. So, Sudhi, can you talk to us about the significance of the Quad foreign ministers meeting at the moment?
Well, the significance is, what has been happening. There is the Iran war that's ongoing, and then we have seen President Trump meeting President Xi a short while ago. And mind you, the Quad is entirely geared in a way to counter the aggression of China that we see in this region. So the big question in front of Quad partners like India, Japan and Australia is there a détente coming between United States and China? And if so, what is the form, shape and what it means for these countries? That is at one level. At the other level, soon after President Trump left Beijing, President Xi and President Putin met. And their, statements that came out of it talked about unilateralism, hegemonism, in an apparent reference to the United States. So, the aggression of China, the coming together of China and the Russians are also a big part of the matrix and calculus of the Quad nations that is there. And of course, because of the war, fuel price rise, India being very badly hit because of this, all this comes into question. So that is, that is the significance of it, and important to watch out is what kind of line the Quad leaders take in the meeting to address all these questions.
Yeah, let's talk a little bit about outcomes, the agenda. What are we likely to hear that would qualify this meeting as successful?
Well, I mean, if you look at the agenda, it's quite bland. It's going to talk about critical minerals. It's going to talk about supply chains. It's going to talk about resilient supply chains, humanitarian and disaster relief. That's broadly on the agenda. And it was, it is not unexpected that the agenda is very bland, because mind you, there seems to have been a drift, so to say, in the Quad grouping, and and the show of that is that the Quad leaders have not met in some time now. The last meeting was in 2024, so there's an entire year that has gone by with the leaders not meeting, indicating that there is a drift. And the reason perhaps is, and this is what Indian diplomats are indicating and suggesting, is that President Trump really is not really keen on multilateral groupings. He's rather keen on bilateral groupings. So that is another question that these foreign ministers will have to address when they meet today, is to keep Quad relevant. And therefore, the outcomes, we are not expecting very major outcomes. It would be a reinforcement of the fact that the Quad is relevant, and Quad is the cooperation between Quad members are quite strong. That's what we are expecting.
All right, government reporter Sudhi Ranjan Sen there in New Delhi. Thank you. Still to come on Insight, Muthoot Finance Director George Alexander Muthoot speaks to us about the rising demand for gold financing as the government tightens import rules. That exclusive interview coming up next. This is Bloomberg. All right, let's take a look at some of the other stories that we're following. Russia has advised the US to evacuate its citizens and diplomats from Ukraine's capital. The Interfax news agency says Foreign Minister Sergei Lavrov told Secretary of State Marco Rubio by phone that Russia is launching systematic and consistent strikes on Kyiv. Moscow frames its drone and missile barrage as retaliation for a Ukrainian attack on a college in the Russian-occupied Luhansk region. The number of confirmed Ebola deaths in the Democratic Republic of Congo has now topped 200, raising fears of a wider regional spread. Response efforts are struggling in a volatile region, with weak health systems and attacks on treatment centres slowing containment. African officials say global pledges of help have reached about $500 million, more than double the amount just last week.
Government and the people of South Africa are pleased to announce an initial contribution of $5 million to Africa CDC in support of the ongoing continental Ebola response. Africa is no longer waiting passively for others to act and to come to its assistance.
The Vatican is joining the growing debate over AI regulation. Pope Leo has called for artificial intelligence to be disarmed, warning it could pose risks to humanity. The Roman Catholic leader also wants AI to be more human-focused and less controlled by powerful tech monopolies. The calls may put the Pope at odds with President Trump, who backs AI deregulation. Let's take a quick look at Asia benchmarks. A bit of a mixed picture out there as the situation in the Strait of Hormuz remains uncertain. More in a moment. This is Bloomberg. All right, welcome back. You're watching Inside. Let's take a quick look at where markets stand this Tuesday in the Asia Pacific. US markets, of course, closed, so not a lot of lead in there, but we are seeing movement in the oil price, which has been fluctuating today. We had some good news a little bit earlier. President Trump saying things were proceeding nicely in terms of reopening the Strait of Hormuz, but then we had also the news that the US and Israeli jets had struck Iranian targets. So the oil price fluctuating. Brent Brent still below 100 a barrel, though, at 97.86. On equities markets, bit of a mixed picture, really. Nikkei off 0.4%. Prime Minister Takaichi says this supplementary budget isn't going to mean extra bond sales. The Hang Seng's been interesting to watch today, coming back from a holiday, up by 0.5%. Market really digesting what this Chinese crackdown on illicit cross-border trading might mean, although there is going to be a 2-year window for investors to sort things out. Elsewhere, the Kospi, also back from a holiday, resuming its rally, better by more than 3%. All right, let's get to Bloomberg's Garfield Reynolds now, leads our Markets Live Asia coverage. Garfield, I want to talk a little bit more about this oil price. You've been writing about it. It's a bit lower, but how sustainable is it? Because we've seen plenty of false dawns before when it comes to the Iran conflict.
Yes, Paul, and in fact, the way that the rhetoric has been developing this time around has some concerning echoes with what we saw in April, where there were plenty of comments about how there was going to be a deal, especially from the US side, and then it became a sort of a longer timeline. Today we've had Marco Rubio out saying it could be a few days. Next thing you know, it's going to be a few days more. Meantime, while markets are very happy to see a lack of severe combat operations, nothing like what we saw in March and the very first days of April, the Strait of Hormuz remains mostly shut, and there's a distinct lack of any real progress towards opening that up in a prompt fashion. Every day the strait is shut is another day where the only thing that's keeping oil prices as low as they are is the rapid draining of inventories both in the US and elsewhere.
We've seen some interesting moves in treasuries as well, 2-year yields easing off a little bit. Do you have a sense that perhaps the bond market's trying to force an end to this conflict, much as it forced a back down over the Liberation Day tariffs?
Well, I think it's more that the US government in general is pretty sensitive to bond yields if they get too high. Interest is already a larger expense for the US federal government than the military, so any fresh highs in yields are definitely something that will get their attention. And it is noticeable that we had that bond sell-off getting quite severe, sending yields up to levels that also were causing a bit of a pullback in equities at some stage. That all came before we had this definitive pivot toward an increase in efforts to achieve progress on peace. So I think higher bond yields are the sort of thing that can help to pressure the US government to seek an out, as it were. But I think in general, the drain on inventories that I mentioned, that's been going at a record pace. That's also not sustainable. So rapid inventory drains and higher yields, those are the sort of mix that is going to push the US to try and achieve a resolution. And there's a strong focus on what the US is doing, partly because the motivations and decision-making processes for the Iranian side of things are as much more opaque than for the US.
Garfield, are there a range of scenarios that we need to consider when it comes to, what the future of the Strait of Hormuz looks like after this conflict, rather than just the binary, it's either open or it's closed?
Well, the big question is, I think it's fair to assume that at some stage it will become less closed than it is now. It's not in either the US's or Iran's interest for it to remain effectively completely shut as it is now. So you would expect to see more transit through there. The question is, how rapid can that be? And in particular, this is one of the imponderables to some extent, how readily the global shipping infrastructure can get back to the pre-war norms. At the moment, we've got a lot of tankers that are heading to the US or coming back from the US. US exports have soared to take up some of the slack created by the the blockage in the Strait of Hormuz, we would need to see, a reset in the global shipping infrastructure in order to allow for, restoration of something approaching the full flow. And I've seen estimates from, I think, the IEA and also some analysts that it would take months even to get back to something like 80% of what we had before the war started. So I think that's a baseline scenario that you need to be looking at, a gradual move towards, say, 50% and then higher over the remaining months of this year. Anything more rapid than that is probably a bonus. And one of the concerns I have about the idea that the oil price is too low is that sort of a pace of restoration still leaves a lot of barrels missing from the global mix, and that sets us up for the potential for significantly higher oil prices unless the inventory drawdown is able to cover enough of that.
All right, Bloomberg's Garfield Reynolds there in Sydney. Well, gold prices have declined as the US strikes in the Strait of Hormuz keep inflation risks elevated. India drives more than 16% of global gold demand. Most of that is imported. Earlier this month, the Indian government hiked tariffs on gold to 15% from 6%, as well as tightening import restrictions. So let's get a little bit more on the impact of these changes. Joining us now exclusively is George Alexander Muthoot, Managing Director of Muthoot Finance, which is India's largest gold loan non-banking financial company. Thank you so much for joining us today, and I just want to start on those regulatory changes. How do you find that reduced demand for physical gold has impacted your business?
Thank you. Good morning. Gold is a commodity which is very much used by the public here. They use it mainly as gold ornaments. India has got a lot of gold ornaments with the public. Estimated that there is about 25 to 30,000 tons of gold with the public. So the gold demand is there, and India has been importing gold also. But then, amount of gold which is still there that gives a lot of interest for the industry to grow in.
I'm wondering if you can tell us a little bit more about the current environment. Do you feel like it's creating the beginning of a big structured boom for gold loan companies? Because households are sitting on a lot of monetizable gold at the moment.
Yeah, there is nothing. There's definitely more and more people are starting to use or monetize the idle gold ornaments which they have. There was definitely earlier there was a taboo on whether they can use these ornaments for their business needs. But today, when the credit is becoming a little difficult, there are a lot of, let's say, restrictions on unsecured lending in the country. It is also not very comfortable with secured lending. Many of the unsecured lending, like the microfinance and the unsecured personal loans, etc., easy to come by today. Definitely purchasing power, monetizing the gold, and the government and the Reserve Bank of India is encouraging.
So we have an environment where gold prices, have been rising. They're off record highs at the moment, though. Do you worry at all about the risk of a sharp correction, what that might mean for loan-to-value ratios for lenders such as yourself?
Yeah, the gold price in India, I should say, in India, has gone up by more than 100% in the last 18 months. But the gold price, which was 100, has become 200 today. That is the Indian price. Because two things are there. The international gold price has gone up, but of course fluctuating. But the value of the Indian rupee versus the dollar has depreciated almost 15% the last 1 year plus. So that is also aiding or increasing the landed price of gold here. Recently, the government has increased the import duty of gold. So all this keeps the elevated price of gold in India. So today, if you look at the people who have borrowed from us and others, it is only less than 60% of the value is what they have taken from us as of today's price. There is a lot of headroom margin for people.
Can you?
One more thing, all the gold companies here don't finance gold, finance only household items. It's not related to gold price. These are household ornaments which they are finances in bar or biscuits. Sentimental value.
Can you?
People generally don't abandon the ornaments even if there's a price fluctuation. I said earlier, it is so huge. You need for that also now.
Can you tell us a little bit more about your customer behaviour? Do you find people are borrowing more out of distress at the moment rather than putting loans towards productive use? And is that changing how you run your business at all?
Yeah, but productive use. People don't borrow a gold loan for a long-term loans. That is a 15-year loan or a 10-year loan, etc. These are all short-term loans. Usually, the loan tenure is, although given for a year, usually the loans are closed in 3 to 4 months' time. So it's a short-term loan, and that is for short-term needs. It is not for distress loan, but people need money. There is India needs, and the people need spending power. They need to purchase things. They need to send their children for education. They need to finance their small businesses. And those are the people who are taking these gold loans. And never do they abandon these gold loans. Of the people who take gold loan, less than 1% of them finally abandon the gold, which goes for auction. So 99% of the people take back the ornaments. So you can't call it as a distress loan. It is actually a loan which is very useful for the customer, for the people to use for their daily needs, daily business needs, or even other home needs.
So have you been tightening your underwriting standards, your internal risk controls in response to all the geopolitical upheaval that we've seen and the volatility in gold prices as well?
Yeah, but to us, in the gold loan business, the gold price is not the factor at all. It is not at all a factor which is mitigating or which has to be mitigated as a risk, because the gold price always stays elevated, and we finance only 60 to 70% of the gold price. So that is not the geopolitical factors are not at all relevant in a gold financing company, because we finance only the ornaments. But in this, the process is always to see and check the gold, whether the gold ornaments are good quality, without destroying the ornament, because we cannot destroy the ornament and check the gold. So we have to have techniques for that. Other than that, the risk here is very little.
I'm wondering if you can tell us a little bit more about Muthoot's fundraising plans for fiscal 2027. You got any plans to tap international markets?
Yeah, I think 60% of our funding comes from the banks here. Maybe 10 to 15% comes through the retail bonds, and 10 to 15% comes from the international market. So international, we take ECBs or we take dollar bonds. So we have done about almost $2 billion of dollar bonds in the last 2 years, which are still yet to mature. And as we go forward to finance our business, we also look at all the three: the bank funding, the Indian retail bonds, and also the international bonds. So these three go together. Probably in the next 1 year, we may be looking at ECBs also, because we need to diversify our funding, not only from the Indian market, from the international market also. We have been financing through international markets for the last 6 years. We have taken a 5-year bond, maybe 6 years back. It has all been repaid. We have currently we have about $1.5 billion of international loans with us.
All right, George Alexander Muthoot, Managing Director at Muthoot Finance, thank you so much for your time today. Still to come, Taiwan overtakes India as the 5th largest stock market in the world, driven by the rise of TSMC. We'll have more on the seemingly relentless AI-driven rally next. This is Bloomberg. All right, you're looking at live pictures of the Quad foreign ministers meeting in New Delhi. Just taking their seats there to get going. It's attended by US Secretary of State Marco Rubio, Australian Foreign Minister Penny Wong and Japanese Foreign Minister Toshimitsu Motegi, with Indian External Affairs Minister S. Jaishankar presiding over that. It's the first meeting of the Quad since 2024. There was a little bit of concern that it was losing a little bit of its early attraction here, so a chance to reassert its relevance. This is the Foreign Ministers meeting of the Quad, taking place right now in New Delhi. We'll bring you news from that as we get it. Let's have a quick listen. In fact, the Indian Foreign Minister is making some open remarks, so let's hear what he has to say.
Many challenges and opportunities in the world. Our focus will clearly be on the Indo-Pacific, which is the specific relevant to the world. At the global level, we have to address issues like supply chain resilience, connectivity choke points, manufacturing and resource concentrations, and gaps in critical infrastructure. Each one of them offers a new opportunity for more partnerships, stronger growth, and realizing the promise of technologies. The Indo-Pacific has, in addition, its own particular concerns. This will require enhancing strategic confidence, ensuring maritime security, promoting economic policies, and fostering a deeper collaborative interest. And that is best done by promoting trusted and transparent partnerships. Over the past several months, our officials have advanced collaboration across the Quad priorities, including maritime security, critical technologies, economic resilience, and HAPR. We have seen encouraging progress on many initiatives. As maritime democracies, pluralistic societies, and market economies, we share a responsibility towards a free and open Indo-Pacific. The region must remain a driver of global growth and stability. We will be underlined that today, through our deliberations, which I am confident will be useful, and I thank you all for being here, and I would request you to make broad opening remarks, starting with Australia. So, over to you.
Thank you very much, Mr. Joshua. Thank you all for hosting us here in Delhi, bringing us together into the world's largest democracy, and having some shaping the Indo-Pacific in the world. And the Secretary of Review, my acknowledge that's intuitively in office, the leadership that you have shown on the Quad. I think the very first meeting after you were sworn in, we appreciate it. And Mr. Muthoot has been there from the very beginning, so it's one of the original Quad ministers, so thank you for your leadership as well. I wanted to start by reflecting on the point that Minister Jaishankar made at one of our earlier calls in Washington, talking about choices and about doing what we can together to ensure that the Indo-Pacific countries within it have the freedom of choice on their security and on certain their sovereign interests, the freedom of choice on their development and on the future of the region we will share. And that is central to how Australia approaches our engagement in the Quad. It's why this partnership and this meeting matters so much to Australia. And it matters to us, it matters to the region, and therefore it matters to the world. I think we all understand we need today the region that is under pressure, accelerating context, deteriorating strategic environment, and acute economic stress. We are full sovereign nations. We have our own histories, our own interests, but there is great alignment in our interests. We all share a vision for the Indo-Pacific, a region that is free and open, a region that is peaceful, stable, and prosperous. And we each bring our unique perspective, experiences, and strengths together as we work to achieve such a region. As the Quad, we delivered concrete results, we responded to natural disasters, we've mobilised to support communities affected by things like the earthquake in Vietnam or the landslide of Papua New Guinea. We've also cooperated on critical infrastructure, undersea cables, we've cooperated on maritime security, and we've cooperated on critical minerals. We all want the Quad to be as strong and as effective as we can make it, focus on delivery, and we are determined to continue its momentum. This is the future we want for our region, peaceful, stable, prosperous region, and today we continue the work to build it.
Thank you. May I now request Japan?
Thank you, Jay. I was speaking Japanese. 日米合意に外相会合を開催できると嬉しく思います。日米合意外相会合を開催できることは嬉しく思います。主催いただいた全員に感謝をいたします。前回私が外務大臣になった2019年の9月、初めての日米合意外相会談の開催をされました。日米合意には個人的にも思い入れがあります。今回11回目となる外相会合の開催は日米合意が
All right, you're seeing live pictures, such as they are, of the Quad meeting in New Delhi, having a few audio-visual problems there, but the meeting between foreign ministers of the US, India, Japan and Australia as well. Some opening remarks there from the Indian Foreign Minister. This is, however, the first significant meeting of the Quad since 2024. It does reflect President Trump's personal preference for bilateral meetings over these sorts of multilateral forums. But on the agenda for this meeting, supply chains, critical technologies, Indo-Pacific coordination. This is according to the Japanese Foreign Ministry as well. The minister is expected to exchange views on advancing Quad cooperation. Of course, this forum set up to act as something of a counter to China's growing influence in the Asia-Pacific region as well. But it hit a few problems after President Trump and Narendra Modi experienced some difficulties. Trump last year raising tariffs on Indian goods to 50%, also claiming credit for bringing peace between India and Pakistan. Didn't go down too well in India. We've got Marco Rubio speaking. Let's take a quick listen into his remarks.
Over the last 3 days, not just I want to thank Minister Jay Shankar and the Indian government for hosting us here, not just in the bilateral visit over the last 3 days, but for hosting this important gathering here again today. I want to thank Toshi and Ken as well for joining us, for your willingness to come over here and do this. And